This is the MoneyMakers. I'm Bruce Whitfield. Welcome to the show this evening. At a recent Discovery Invest conference, there was a clash of opinions, as any good conference should have. Amongst the discussions, of course, were issues around investing and the currency. Joining me this evening, Mike Schussler, the chief economist at economists.co.za, and Jeremy Gardiner, who's an executive director at Investec Asset Management. Mike Schussler, let's start with you. Very bearish tone on the currency, which suggests to me that we should be more bullish.
No, I wouldn't say that. I think, you should be more bullish about equities because much of our equities, big firms get their money from overseas because they bought so many other operations or they've moved their headquarters, which doesn't count as an investment, for example. But what we are seeing is that South Africa, with a big current account deficit, same time commodity prices are collapsing. At the same time, we've got a very strong possibility of further downgrades from the rating agencies as we go along the next few years. I also don't forecast currencies in the next week. But what I will say is that I don't think we've seen the end of the rand's decline. And I say this because in the 80s, when we also had weak commodity prices, we saw over 70% decline in the rand. Now, if we look at this, so far this decade, we've had around a 50% decline. And I think for the next 5 years, the decline might not be as bad as the first 5 years of this decade, but certainly I think we could have another 20% in this decade of a decline. So
which means by 2020 we could have around a 20 to the dollar.
That's correct, because if you look at how they measure currencies, it's always how much a dollar buys. And at this moment in time, go back to 1980. It was $1.34 bought a rand. Now we're looking at 7 cents today, roughly speaking, 7 cents buying a rand. So I can see us going to 5 American cents buying a rand, and that would then be obviously 20 rand to a dollar.
Jeremy Gardiner, I saw a graph by your group economist, Annabelle Bishop, in which she's saying, hold on a second, purchasing power parity, it's more complicated than the Big Mac index, but that suggests that the rand right now should probably be closer to stronger than 10 to the dollar.
Sure.
That's why I say, is it when everybody agrees that the rand's on a one-way ticket down, should we not be contrarian on the currency? Or does it take a lot of guts to be contrarian?
Look, I think Annabelle is right. I think that the majority of the rand weakness for the moment has probably already been done. And I think it's also very important for South Africans to remember that this is not a rand problem. This is an emerging markets currency problem. $1 trillion has left emerging markets over the last 12 months. It's double what left during the global financial collapse in 2008. So it's a significant amount has flown out. After the global financial collapse, $2 trillion flowed back into emerging markets. But that was because we had a commodity boom. You're not going to get this time round. So the rand weakness probably will carry on longer than expected. Until Janet Yellen puts up interest rates in the States, the currency could go anywhere. They are going to remain skittish, even though the currency weakness relating to the rate hike in the US is probably already in the price. Emerging market currencies are going to remain skittish until she starts either raising rates or tells us she's not going to raise
But she's never going to do that because she doesn't speak a language anybody else other than people who follow the Fed, like Mike Schussler, understand.
We'll get clarity by December, probably, in terms of where the Fed is going. They'll either take it up in December or
they won't.
Or we'll know they're not going to take it up because they're
just because they don't take it up in December doesn't mean they're not going to do it in February or April or June, Mike Schussler.
No, that's fair. And the other thing we must remember, it's probably not just a once-off. It might be once-off for a year or so, but we're probably going to see another interest rate hike in the future. Because right now, the era of cheap money, where it started in the States, is probably coming to an end. It's still cheapish money, don't make any mistake here, but it is the end. It might not be the end, but it's the beginning of the end, to paraphrase Churchill.
You sound like Donald Rumsfeld for a moment, yes.
Well, not trying to do, but I think, we have to live with that reality. And also, I think South Africans are preparing for that. Our big firms are out there buying. Every day I read another firm, whether it's Discovery or Investec or an Imperial, and now the smaller firms, the medium-sized firms, even the family firms are asking the question, where do I go and look for better growth than in South Africa? Because our growth prospects are weaker than most other countries, and that's another aspect to it. But at the other end, ultimately, that flow of money helps the rand stabilize. I understand that part. But I think because those foreigners are not going to be so infatuated with commodity economies and emerging market economies, I really think it's going to take a lot longer for the rand to raise back.
Okay.
We look at the last 3 decades. We've had 2.5 or 3.5 decades, 2.5 decades of falls, 1 decade of relative stability. That's the history of the
rand. But as Jeremy's
rand.
advertising will tell us, past performance is no guarantee of future performance when it comes to that. But Jeremy, okay, so for the rest of us, okay, so corporates can take their money offshore. They've got massive balance sheets. They can flex. They can go to the Reserve Bank and ask for permission to take more money offshore. And they can do what Brait, for example, has done in the last 12 months or so, and has done enormous offshore investment. For the rest of us schmucks who have a direct debit that goes into a unit trust, what do we do in this environment, this scenario, where a weakness is likely?
Well, you've got to, as individuals, treat a currency like any other asset. And the trick there is to try and sell the currency when it's expensive, buy it when it's cheap. But the point is you mustn't actually get into a situation where you're trying to time the currency in this country. We've got a situation where the rand has weakened quite significantly over the last 3 years. We've seen this movie before, back in 2001, where it went down to about 14 rand to the dollar. South Africans were mortgaging their houses to take money out of the country, borrowing every cent they could because they figured that it was going to go to 20 within the next year because they'd written off the country. We've got to be careful of doing that. You've got to realize that the currency has already been oversold. You can still take money off now, but you've got to be careful of capitalizing that loss completely. But if you wait for the rand to go back 10-15%, I've been waiting for the rand to strengthen 20%. I'm sitting on cash, I don't want to take it offshore at this level. You've also got to realize what environment is going to get the rand to strengthen by 20-25%. And that environment would be a benign global environment where the world is growing nicely, where there are no issues. The problem is that while I'm waiting for the rand to go back 20%, equity markets will probably go up 15-20% in the meantime. So actually you've got to be rational about it. You've got to diversify your portfolio. The amount is up to you. Because, don't try and time the currency.
I just saw a great quote from Steve Forbes, the guy behind the Forbes media empire, basically talking about consistency. And, we tend to, as South Africans, we're very short-term in our thinking because we're always one breath away from some kind of crisis or other. So we tend to focus on a year or 2 or 3's returns. We're not thinking of 20 years hence.
Exactly. And I think for a lot of people, they would have taken a large portion of their portfolio offshore over the years. I mean, the time to do it was when the rand was at 6 to the dollar. And I think the entire industry was advocating at the time, take money offshore. But at that stage, nobody wanted to do it. Because South Africa looked great and the developed world looked terrible.
It's different this time.
So
no, it's actually the same. If you take it in a different way, because there's one other thing.
Yeah.
The South African firm, the corporate, the big corporate, has been for 20 years taking their money out. i.e. they do it via regulations, they transfer their headquarters somewhere else, and we now have many that have done that. We've also got others that are taking their money out in more conventional ways and buying up small firms all around. But if I look at the recent history, I still see a lot of that able to happen. And yes, sometimes they got their fingers burnt. There have been some in Australia of the retailers that have not done too well. Others maybe have burnt their fingers somewhere else. But I think they've learned a lot of lessons. And, I saw somebody the other day and they said something, we're doing our first mini African excursion, I said, oh, okay. I said, no, we're moving into Botswana with an office. And why we like Botswana is because that's the first stepping stone. We get to know about Africa there without too many risks because it's still hedged to South Africa that we understand. And then we're going to do Namibia, and then we're going to go to Zambia. And those are the sort of things that you see. And these are small little companies, if you look at it, that are providing farmers or mines with equipment and petrol and all that type of stuff.
There's a very good point there, and that is that South African companies understand emerging markets. We saw with South African breweries what they created, but they also understand Africa. And Africa's turn is coming, Africa is growing. In fact, a lot of Africa is growing a lot more than South Africa.
Yes.
And South African companies are operating across the continent. Yes, we've seen over the last couple of weeks a couple of bumps along the way, but they're operating across the continent, and that is very exciting because even though you may not know Africa, it's in our blood. We understand it better than someone that comes from Ottawa or New York. And as a result,
And
it is our competitive advantage.
But the thing is, the
extent.
next step of companies is now moving into Africa. It's no longer just the big corporate.
Yeah.
It's the normal firm. It's not yet maybe the small firm, but it's really the normal firm that starts.
And ultimately, we need to rely on human ingenuity here as well, Jeremy. I mean, the world of 20 years ago is so fundamentally different to the world of today. The Berlin Wall was coming down, communism was, in most parts of the world, dying, and the world was opening up to trade and business like never before. We have no idea, sitting here today in 2015, what this world is going to look like in 2035. It's about consistency, patience, and mostly remaining calm, I suppose, with your eyes wide open and your senses attuned.
And diversification. One's got to spread one's assets. Nobody, as we saw Warren Buffett in the video saying, he has no idea what's going to happen next. Nobody has any idea what's going to happen next. In an environment like that, diversify your portfolio. Don't avoid equities. Equities probably the best of a bad bunch, but if you're looking for growth, you're going to have equities in your portfolio. Just hang in there.
Manage the risk.
Yeah, and equities are diverse in currency as well, if you think about it. South African equities.
You also can't sit and wait for the equity market to weaken in order to go in, because then you can miss any. I've also been waiting there.
You need to go and stand in front of the mirror, Jeremy, and give yourself the speech.
Yes. But you see, therein lies the whole thing, because all of us with our own money get over emotional. And you try and make emotional decisions. And effectively, that's where a third party advising you, a financial advisor, can add a lot of value in terms of stripping emotion out of your investment thinking.
There we go. Jeremy Gardiner from Investec Asset Management. Thank you very much. Mike Schussler from economist.co.za. Thank you very much. And thank you for watching this evening. I'm Bruce Whitfield. This is the Moneymakers. More Moneymakers tomorrow. Till then, bye-bye.